I forgot to put this in the beginning of the video. Here's a cool play that we really killed it on. This was what, 40 cents to $3, but we sold out really early. But you guys need to do the most important thing. Do not leave this video without posting your watch list below. We need a source information. Shout out to chat. Okay, here's your video. What's going on, ladies and gentlemen? I got your watch list coming into May 22nd, 2019. And surprisingly, we're going to talk technicals because a technical warning has been triggered. I'm going to go over this Hindenburg Omen, but there's no need for immediate cause or panic. I will explain what this is and what it means. We're going to go over our plays, and then I have a few options, and then a lot of people, shout out all the new people on the stream. Shout out the chat. We're going to talk about some of the plays that I made and even some of the stuff we're seeing with option pricing this week. So we had a really good phone call today, you guys. Focus on protecting your money, especially in this time. I said yesterday, the stock market is coming into an area where it wants to make up its mind with the trade news, the trade war. We're getting everything from the Huawei ban, so on and so forth. So you have to be very strategic with your trades. And even then, when you're not getting as much volatility, you day traders are even there too, you're not really getting too big of movement. So day traders, swing traders, option traders, you got to be very, very precise on this. So we're going to talk about that. Like the video. Make sure you guys are there in the morning. We are live 30 minutes before open, youtube.com/thestockmarket. And shout out everybody on the stream alert. So we had a bunch of people signed up today. I love it. It's actually even the first month we've finally done it. So let me know your guys' feedback on that. It's also the first link in the description. But let us get into the Hindenburg. So you might have seen me talk about this on stream before, and you could even look it up. If you guys look up the Hindenburg Omen, it's a technical. It's very, very simple. Somebody made this back in the day, this guy. And the value of Hilly, or which one is that? The high-low logic index. So think about what you got here, high-low logic index. It's pretty much a high-low indicator. It's saying when the high-low is telling you something crazy, but a different sort of high-low. So I'm using this for simplicity and example sake here because you guys have seen that. But it's saying in the lesser of the New York Stock Exchange, new highs of new lows divided by the number of New York Stock Exchange issues traded. That's the amount of stocks on the stock exchange, smoothed by an appropriate exponential moving average, the EMA. So it gets very technical, and I don't really going to view that. And some people, they call it an omen because it's named after the Hindenburg, this big blimp. And if you guys don't know about the Hindenburg, that was May 6, 1937. It was in Township, New Jersey, United States. There was a German passenger ship, the LZ-129 Hindenburg, caught fire and was destroyed during its attempt to dock at the mooring mast at Naval Air Station Lakehurst. So that was pretty funny, right? But that is actually all true. So you guys could look that up. But this big blimp back in the day, huge accident, kind of reminds me of the economy now. It was twisted. It was really just on the approach downward. And that's what led it to spiraling out of control. But no, actually, I really like things. I think we're having a good, we got some fun years ahead of us on both ways, long or short. But even then, people have viewed this as very negative. They viewed this to say it is bad. And if you didn't, and they're saying that when this does happen, it is supposed to lead to a crash because when it has been triggered in the past, it leads to the markets to drop. And now they're always false indicators and false things. So I'm giving you guys my twist on it. I made up the frog pattern. Maybe we'll we're just going to rebrand everything here and we're going to make it, better for the cult. And so sometimes you guys could realize the ridiculousness of some of this stuff that you follow without understanding the background. We'll call it the cat dog because that's my favorite show back in the day. And what this has to do with is highs and lows, the cat dog, two things pulling in the direction. And that's what I want to talk about. So what the example was saying, what the Hindenburg is the amount of stocks traded on the New York Stock Exchange, and that's 2,800 companies. So I already did the math there, but you take 2,800 companies, and it's about 2.8% on the high-low index. So times that 0.028, you're left with 78. That is the key number to look for. So pretty much that is 2.8% of all the stocks on there. And what you're looking for is new highs and new lows. So it's saying whenever you have now 2.8% of the stocks or more hitting highs or new highs, new 52-week highs, that's the moving average right there, versus now stocks hitting 52-week lows, another 2.8%, that's saying you have the Hindenburg because what's happening, you're getting that push and pull. That means you have just as many stocks as you is hitting highs, or the percentage, there's another large percentage of stocks hitting lows. And this is usually for a bull market, they say when it's coming to an end or stuff like that, because it's showing this is why I call it the cat dog, volatility. And that's what I want to highlight here. And also, it's usually within a 30-day period. So whenever it gets triggered, that now becomes a 30-day period. So why I'm saying this, because we actually saw that not too long ago here in May, I believe last Friday. So it actually started here on Friday. I think I already have it selected, May 17th. So a few days ago is when we got the first trigger, and you could see it here where the New York Stock Exchange on that amount of all the stocks, there was 112 new highs, new 52-week highs, while at the same time there was 80 lows. So remember, we're looking for that number 78. So you have more than 78 lows and then 112 highs. So that is the whole point, is that you have 2.8% of stocks just above there on the highs, a little bit, almost double that, are hitting highs, while now you're starting to hit stocks hit lows. So think about rotation when people are starting to get nervous or there's a dislocation like you're seeing with the trade war and everything else. It makes sense why you're getting these cuck moves and why things aren't moving like that, because you have just other people are hitting lows and highs. And why I call it the cat dog is when you see that, and when you see a big percentage, and that's why there's 2.8%, that is enough of a percentage to show you that has more weighting in the market to do something like that. So when you see that, I say I don't think it's an omen for a crash. I think it's an omen for volatility, because there has been many times it's been triggered and there's usually a reaction, and now they say it's a 30-day period, and then they say if it gets triggered again, it resets. So pay attention to that. But what I'm saying is that until we see what happens here, and this has happened before, and you could be early on this, and things could bounce and start hitting highs, and those lows will come out the window. But what I want to highlight, that's the Friday. But coming into that, and even actually I think on Monday too, yesterday we had 72 highs, so just under that 78 number. So it's at 2 point something, and then 116 lows. But again, that's what I'm saying. That's cat dog, because that's what I'm saying. It's not really the omen to say there's a big market crash, but this is telling us something. And that's what I'm saying. I'm putting this on the watch list for you guys so you are aware of all this. But coming into the other days, this is what I'm showing you, is that this is developing a situation. Man, this thing is so slow loading, because if you go, I'm trying to go back to the Thursday and the Tuesday. So until it loads, I'll explain it. And pretty much though, from pretty much like Tuesday or Wednesday, I believe. I think it was Wednesday, Thursday, Friday, and then yesterday. Today we kind of saw it too. That's what we'll discuss. But it wasn't the Hindenburg more or less, but it was high numbers. So there was still, it wasn't exactly 2.8%. But since about the last Wednesday, we're seeing this dislocation, and it's kind of making sense when we even saw what's happening with the news. So there's that. I'd pay attention for you guys. You guys could go through that. Just China. So you guys could go through Wall Street Journal. It's WSJ highs and lows, or 52-week highs and lows. You just Google it. That's what I do to get to the webpage every time. But there's that. But the next thing to watch, we've been talking about it, and really I encourage you guys to watch this very closely, because we were watching the yuan and how it's been moving with the markets. But we really noticed today it's been crazy. So that's a big weakening move. We'll see what happens with futures. But it seemed like it was moving very independently today and wasn't affecting the market as we expected. And somebody brought it up with the dollar, and the dollar has been looking weak in it. I was kind of really looking at it saying, hey, well, if the dollar gets stronger, that would weaken them. But if the dollar starts to look weak and we see a breakdown in the dollar at any point, that could start affecting the Chinese currency. And I had a theory of that, using that to combat the trade war. But we'll see. But keep a close eye out for it. But even honestly, before jumping to any conclusions, I don't want to speculate too heavy on it, because at the end of the day, this is still digestion. Someone said that the trade war is slow. They're like, oh, this is slow. I thought it's supposed to be exciting. I was like, how many trade wars have you been a part of? For things to develop, this, just think like a legal case, you guys. Court takes a long time. These guys are going back and forth. We're dealing with business days. You can't even get items in China in a day, so don't really expect that. That's where we have to be really, really diligent with how we're playing all this. So there's all that. Tomorrow, what I expect really to see, I'm going to be watching the divergence. We want to look for the gap ups and downs, but honestly, it's still playing off the news. What I'm going to look for, oil had a big drop, and it was making some moves today, but it's going to be oil, dollar, China. So anybody knows me, those are very, very important things. We want to start getting in the mix of that now, and we might see other news develop. We had the Fed, I think Rosenberg today said that the trade war creates uncertainties, so that could be hawkish. We have the Fed minutes coming up, so really, we need development of news, but even in then, it's either scaling in small or not at all. I only made like 2 plays or 4 plays today, but you got to be slow and steady on that. So there's that, but let's talk about what there is to play tomorrow. Now, we were going to play these at earnings. I liked them. Urban Outfitters, they dropped 6%, so just a little bit more than they were pricing in, so we didn't play that. But Nordstrom dropped 8%. They guided, I think this is like an 8-year low for them. They slashed guidance, and now I knew they were going to do bad, but I was thinking that I really threw out guidance out the window. So with retail, that was bad. We even saw the same thing happen to Kohl's today. So watch them. Kohl's was an interesting move today, but watch JWN, Nordstrom, and Urban Outfitters. We're going to be watching those tomorrow. There was also Home Depot, which had earnings, and that's going to be a good one post-earnings because it didn't really move much. It had a lot of activity and chilled out, but that's what we want. And then also Walmart as well, kind of in the same respect. And if you see it, Walmart hasn't moved. It's staying at, this is a 7-day. It's literally just hasn't done anything. So that's killing premium. And somebody, and we're going to talk about this Disney play. I made a play on Disney. We're going to go over it, but this is still a great one to watch. But now, as far as, some of these plays with what's happening, we still have to think about the semiconductor. So there's the semiconductor. Actually, this is another unique one because, again, we brought both of these up from the beginning of this week, you guys. Boeing. So they're making interesting moves. A lot of people wanted to look at Boeing today, but I said be careful. Don't get caught up thinking any pop on Boeing is news. Watch Raytheon. Watch LMT, watch NOC, any defense stocks. Look, if I was hiding the tickers, you wouldn't know which one was Boeing and which one was Raytheon. You would really think they were all the same. So think about that for a second, but you want to watch those diverge if there really is an independent news event like we've been seeing. So watch that. We need to make a video on velocity and volume, but keep out for that. And then Tesla too, it did a really big thing today. It broke below, then it broke down, new low, then came back up. It's been doing that, but watch it. But we were looking at the premium. The premiums aren't going up. So surprisingly, the longer term premium isn't going up too high. And I believe Elon announced he purchased more shares. So we'll see what happens there. But watch that. Even the auto stocks in general, I still want to keep an eye on GM, even the bank stocks too. But those are all going to be very important to watch. However, now, as far as other plays that we're watching and other good ones, I like Roku. We could look at the options on this one, and I think this is going to take us to the chain, but wait for it to come down. Wait for it to make a move. When Roku makes these big swings, equal and opposite reaction. Sometimes it might stay up here, but it usually can make a big swing. But you guys want to take advantages of gap up and downs. This is another one, because we played UNH yesterday. That contract I bought for $40 was at like $300 or $400 today, you guys. We sold out at like 90 or 100. It went up today. The contracts didn't get any cheaper. I'm going to wait for a gap up or down in the morning. If it depreciates the contracts, we could take it. So tomorrow's going to be interesting because I did notice today, this is what I was saying with pricing. You guys be very, very careful. I lost a lot more than expected, and that means I either forecasted the future very, very wrong, or I did that. It was wrong. There's many scenarios to look at, but what it's saying, I think you either put too much money on or I expected a little too much to happen here because I've noticed though a lot of the premiums really capitulated, and it's bringing up the same reason why I lost money is the same opportunity that I'm seeing. But watch UNH, and this is where it comes back to Disney. It's where the stocks move. So now this is going to lead to the option chain and the option plays that we want to make. So I bought into Disney today, and somebody asked why, and now this is what's going to bring up the contracts. I got the Julys, and they are very, very attractive. We're going to go look at them, but honestly, we saw a lot of it today. We didn't see it on Nordstrom and Urban because they had the earnings premium, but a lot of July contracts are starting to appear now. They're starting to make that market now as we're coming into that period because a lot of them were skipping from June to August or September or something like that. So there's these July contracts. They have more time, but remember now, the Junes are becoming monthlies now. Those are 30 days left. So July is going to get you that time you need, but think even August, September. But now this is what happened. This blew a lot of people's minds. Everyone's like, why are you buying it here right now? I only scaled in. I put about like $60 or $70 or no, 80 actually after commission and all that. And what happened here though, people said, why did I buy it? I said, simple. Why did you buy it here? Why did everybody and their mother want to play Disney when it was going up? Oh, I asked in the chat, people said the Avengers movie, the streaming service, their earnings, this, literally, you guys could name 10 good reasons, and guess what? I agree with all of them. The difference was people wanted to buy the option contract the day after it shot up from 116 to 132, and then 7 days later, it went from 132 to 140, and people wanted to buy more contracts all the way up. I agree with your reasoning. I just waited. This is pushing it to the wall with more time instead of the weekly. It comes back down, and now not only did it go up and come back down and the contracts depreciate, this is what really gets me off right here. It's staying the same for about another 2 weeks now. You get it stuck in this little $3-4 range. Remember, I was saying it over here. Disney doesn't move like that, guys. You guys got spoiled. That's why. Remember, I flipped the weeklies. one time over here, one time over here, and after that, I was like, it's too expensive. If you guys remember, we didn't touch it because Disney's not supposed to move like that. Okay, after 2 weeks, you're like, all right, really, this isn't going to become Amazon out of nowhere. So I got it for the same reasoning, and if I do like it, and I think it could hold up, and if the market does good, it could start to get up there. But that's why we need time in it. But we could also scale in, because then give it some more time. If it comes down, we can make an even better play, maybe even get August or even get closer to the money, because now I'll show you which ones you could get, and then this is the whole play with it. This is the play I'm doing on it. I got in, so you guys could watch it now. So you've seen how this works. You could do the same, but I encourage you to learn from it. We made a paper trade account. This is what I've been doing. Anytime this is how you guys could practice, and it's awesome because look, it's all data. I get to see what happens. I bought a Boeing weekly yesterday. I got to see what happens because then I bought a June call and a January call at the same time, so I could see, hey, guess what? I lost on my weeklies, but I made $20 here and I made $7 here. The weeklies went down 50%. So I'm getting the same. My most optimal play, if I saw what I saw yesterday, I should have got a June contract. Same thing with the JD now. JD, I lost money. I would have lost, what, $80 on the weekly, $10 on the December, and then I think I lost 40% on the June. So do that and check that out so you guys can play along with this play in that sense. Again, educational learning purposes, you guys. I want you to learn the strategy. If you don't know options, you're just going to burn money. So follow. This isn't even helpful. Like, sure, I get just as lucky as you. So yeah, maybe pray that I get lucky. Then you could copy me. I don't know what you guys believe in, but if you really want to take this seriously, you could learn and understand the concept and the strategy here. So I went to July. I like the Julys a lot. I got the 150s. I got 2 of these for 37 cents. And now you could see on the contract why it's a good time. It's just about to break and capitulate, but it's only a good time to speculate or to scale in because it's hitting a new low, but it's still just at that premium from before it ran up. However, if it breaks down from here and there's more decay, this contract's really going to go under. So that's why I only put in $80 because, again, I could set up a very good position on this. $80 today. Let's wait a few more days, and then again, if these contracts don't work or give us any support or help, what's going to happen? Give it another week or two, these 140s will come back down to around 37, maybe 50 cents, depending on what happens. Yeah, they'll probably come back around here, because then this is, they need to capitulate here. They'll come down to 20 cents. Oh, yeah, baby, maybe even lower. So we'll be able to get those, and then instead of buying, 5 of these at a better price, I can now get, like I said, 140 and hopefully even 130, but that's the plan. So that's the first scale in. That's a good play to watch. I like Disney a lot. We played General Dynamics, but that was an interesting play. But AT&T, I really want you guys to pay attention to this. It's starting to move. Again, take a look at the market. It's meeting up with the market, but now it's going to start to overpass it. But these are low volatility stocks. They've moved up, so you have to be careful because this is just like Disney, you guys. Remember, don't chase them when they're doing this. We have to wait. We have to see if there really is a reason, again, equal and opposite reactions to push this up. Then we could probably go for it and take it. However, we want to wait a little bit. I'm going to keep my eyes on these. Definitely AT&T, Verizon, I like those. And what else? And then the Sprint and then the T-Mobile. There's that ones, but then let's go to another favorite option play because it's doing exactly what I want. It's now going to become Wednesday. It's holding the exact price we want, the 200. Remember, I told you guys, someone said 205s for next week. I don't like to go this far out on McDonald's, especially with what it's been doing. But again, if you want to scale in, that's not a bad price to scale in on the next weeks. I'm going to be looking at both this week and next week. I like the 202s. If we could get these tomorrow, if we get some more evaporation and these come down to like 30 cents, they were hitting $1 yesterday at the top and came down to 50. If we could get these half off, maybe 60% off, that could be a good deal. So depending on what happens on open, look to take advantage of any of those types of moves. But I think there's that. And lastly, a lot of ones we have to watch. I wanted it this morning. They were super expensive. It ended up making a crazy move, but this is what we want. And watch for the gap down. Same thing is going to be with UNH. The same contract applies on that, so that is the next one. But wait for some of these in the money to fall out, especially the ones further out. And guess what, you guys? This is the one you guys want to do for the frog pattern. And now people ask, where is the frog pattern? You have to be careful because if you see the option price goes higher than the stock, that is an inverse frog and you need to run. That is unnatural and it will kill you. That means you're paying too much premium. So be careful. See, there's no frogs on this chart. As you can see, all the premiums are high. That kind of looked like a frog. But again, so probably around here, this 12-cent one, as you can see, but it's at $96. So it's really going to take a lot. And again, as time decay is really going to kill these. So be careful on the frogging. We're going to have to wait there. So keep an eye out on that, and we will be. And then lastly, UNH. This one is the same concept as Roku. However, the key I want to show you guys is the price, because we already sold out. I sold out of these for a reason. Okay, I bought these yesterday. You guys remember we bought them at 40 cents. This was on the watch list. Sold out around here. They shot up today to about $300. They closed around 218. But what am I waiting for is I know the value of these. If I sold out at $100, I sold out because I thought it would go down, because it was still really, it went from far out of the money Monday to in the money. Just because it held today, we did the math. If the stock right now is at 250.40, this contract's really only worth $40. So again, I'd be willing to maybe pay that, but that's what we paid initially. So again, it's just only getting it has $2 because of time premium. So again, we need to wait till time is going to make that cheaper. Hopefully that's clicking with you guys. So I'm going to leave it there. That's a good thing to leave it on. I love you guys. Drop a like on the video. Make sure you are subscribed here and the live streaming channel. You better be there in the morning. And oh my gosh, I forgot to tell you guys, post your watch list below. But I love you guys. Let's go.